You're listening to Corner Room, where we break down the stories behind the headlines. Welcome back. I'm Alex, and we have a mountain of sources to get through today, covering, well, everything from old-school Wall Street to the literal edge of space.
And I'm Maya, here to add a bit of context to all that excitement. We've got some really fascinating threads. Veteran investors making big moves, huge institutions adopting new tech, and even politics getting tangled up in crypto.
It is a lot. So our mission today is to really deep dive into all these different signals and try to figure out what it all means. We're going from bank stocks to tokenization to commercial space travel. Let's just jump right in.
Okay, so let's start with a really classic signal. It's coming from Ron Barron, of Barron Capital. This isn't some flashy tech story. This is old school value investing.
Exactly. The source material points out he's been quietly buying up financial stocks, banks, financial services, that kind of thing.
Yeah.
And this is at a time when, most people are pretty nervous about that sector.
Yeah, they are. You have higher interest rates, regulatory worries, commercial real estate exposure. There are a lot of headwinds.
So why is he doing it? Why bet against the entire market's mood right now?
Well, that's what makes it a signal, right? When an investor like Barron puts serious money into a sector everyone else dislikes, he's basically saying, you're all focused on the short-term noise. He sees something else.
He sees value that's been oversold.
Profoundly oversold, perhaps. He's signaling that he thinks these companies are fundamentally strong and that the economy is probably in better shape than the daily headlines suggest.
But isn't that a massive risk? If the economy doesn't bounce back the way he thinks, financials are going to get hit hard.
Oh, absolutely. It's a calculated risk for sure. But he's playing the long game. It's like everyone is fleeing a neighborhood because of a temporary problem, and he's quietly buying up the best real estate on the block for pennies on the dollar.
Right. He's betting on the revitalization. He thinks the crowds are coming back eventually.
Precisely. So for you, if you're watching your own portfolio, a move like this from a major investor could suggest a couple of things. Either the economy has some hidden strength, or maybe the short sellers betting against the banks are just way too overextended.
Setting up a potential rally if things turn around.
Exactly. It's a data point worth watching. It often precedes a bigger shift in institutional money.
Okay, so from that very traditional market signal, let's pivot to the complete opposite. The newest plumbing being installed on Wall Street.
Right. Tokenization. Specifically, a big move from a company called Equiland.
Now, Equiland isn't a name most people know, but they are a huge deal behind the scenes, yeah.
A very big deal. They run a massive platform for securities lending. So they help big firms borrow and lend stocks and bonds to each other, billions of dollars a day. And they just made a strategic investment in a company called Digital Prime Technologies.
And Digital Prime builds the infrastructure for tokenized assets. Okay, let's break that down because I feel like the word tokenization makes a lot of people's eyes glaze over.
It can, but the concept is actually pretty simple. A tokenized asset is just a digital representation of a real-world thing, a stock, a bond, a piece of real estate that lives on a blockchain.
Think of it like a digital deed of ownership. And the big benefit here is speed, right? Efficiency.
That's the main driver. Right now, most trades take 2 whole business days to settle. They call it T+2.
And in those 2 days, you have risk. The other party could default, the market could move against you, all sorts of things.
Exactly. It's called counterparty risk. Tokenization promises to settle trades in seconds, not days. And it can happen 2047.
So if the tech is that good, why are these huge firms like Equiland only getting into it now? Crypto's been around for over a decade. Are they just trying to take this decentralized tech and pull it back under their control?
That's a fair question, and part of it is just caution. These institutions move very slowly because they manage trillions of dollars. But this move from Equiland, it's a huge vote of confidence. It signals that they think the tech is finally mature and, crucially, that the regulatory path is becoming clearer.
So it's moving out of the Wild West phase.
And into the serious, regulated financial utility phase. This isn't about the next meme coin. This is about rebuilding the core infrastructure of finance to be faster, cheaper, and less risky.
Lowering costs and opening up new markets for things that used to be hard to trade, like fine art or private equity.
That's the long-term vision. Yes.
And speaking of huge institutions embracing tech, We have to talk about BlackRock.
Yeah, the world's largest asset manager, over $10 trillion. And they just announced they're bringing in 5 new, very specialized tech fellows.
And these aren't just your standard finance hires. We're
Yeah.
talking about data scientists, AI experts, top-tier coders, some from academia, some from tech unicorns.
That's right. And they're giving them a 6-month sandbox to just experiment. The goal is to prototype new ideas and push BlackRock's tech forward fast.
Which, for you at home, better tech at that scale can mean smarter trades, better risk management, and maybe even higher returns.
Well, that's the hope. In an industry where fees are always getting lower, the only real edge you have left is a technological one.
So this is about survival then, even for a giant like BlackRock. They know if they stand still, some nimble little fintech startup is going to eat their lunch.
It's a healthy paranoia. They are actively importing disruptive ideas from the outside to avoid getting complacent on the inside. They know the future isn't just about managing money, it's about managing massive amounts of data.
And that need to innovate is now hitting absolutely everywhere. So let's shift gears completely and talk about politics. There was a recent New York Times piece about Trump Crypto Unleashed.
This is a really fascinating and complicated development. We're seeing political campaigns start to use crypto tokens,
Yeah.
meme coins, loyalty tokens as a way to engage their base and also to fundraise.
So the idea is your supporters buy a specific token, and holding it is kind of like a digital VIP pass.
In a way, yes. It might get them access to perks or exclusive content. It's a new way to monetize enthusiasm. But it immediately runs into a wall of regulatory questions.
Yeah, I can imagine. What are the biggest red flags for the critics here?
There are 2 main ones. First, tracing the money. Campaign finance laws have very strict rules about knowing your donor, so-called KYC, to prevent things like illegal foreign contributions. With decentralized crypto, that can be incredibly difficult.
Okay, so source of funds is one. What's the other?
Contribution limits. The FEC has caps on how much any one person can donate. But if someone contributes using a token whose value is swinging wildly up and down, how do you even calculate the true value of that donation?
Right. And for the supporter, your $10 donation could suddenly be worth $1 or $100. Your political support just became a volatile investment.
Exactly. It's a legal and ethical gray area that regulators are scrambling to figure out. And until they do, this is going to be a very controversial space.
From complex regulations to complex physics, let's jump now to the new race for space, specifically Blue Origin.
Jeff Bezos' company. They're getting ready for a huge milestone, their first fully commercial flight next year, with a paying customer who isn't a trained astronaut.
This is a big step. And just to clarify, these are suborbital flights, right?
That's right. They use reusable rockets to fly up to the edge of space, about 62 miles up. The passengers get a few minutes of weightlessness and an incredible view of the Earth's curve before coming back down.
So it's often called space tourism, which sounds like a vacation for the super rich. But there's more to it than that, is there? Why should the rest of us care?
The science. Access to that microgravity environment is crucial for all sorts of research in physics, biology, and materials science.
And until now, getting an experiment up there meant waiting for a spot on a billion-dollar government rocket or the space station.
A very long and very expensive process. Now, commercial flights like this offer a much cheaper and faster way for researchers to run experiments. It dramatically speeds up the pace of innovation.
So more competition is lowering the barrier to entry for space research.
Absolutely. You can think of it like commercial airlines back in the 1930s. It started as a novelty for the wealthy, but competition from SpaceX, from Virgin Galactic, drives the technology forward, improves safety, and eventually brings down the cost for everyone. We're at the very beginning of that process for space.
Truly amazing to watch it unfold. Okay, let's circle back for our last topic, back to digital finance and a really big question about privacy versus transparency.
This comes from a statement by former SEC Chair Jay Clayton, who said that crypto could become a powerful financial surveillance tool.
Which sounds pretty ominous.
It does, but his point is about the fundamental nature of a public blockchain. Unlike cash, which is anonymous, almost every transaction on a public ledger is permanent and traceable.
So every purchase, every transfer, it's all written on this public unchangeable wall. And if law enforcement can link your real-world identity to just one of your crypto wallets,
they can potentially see your entire financial history on that chain. That's what makes it such a powerful tool for catching criminals and money launderers.
But that's the conflict, right? How do you use that transparency to stop bad guys without creating a system of, overbearing snooping on regular people. It's freedom versus safety.
That is the core tension, and regulators are actively looking for a technological solution, a way to have both.
And is there one?
The most promising path forward seems to involve something called zero-knowledge proofs.
Okay, can you explain that without a degree in cryptography?
I'll try. A zero-knowledge proof lets you prove that something is true without revealing the secret information behind it. So, you could prove you have enough money for a purchase without showing your exact bank balance, or prove you're over 21 without revealing your birth date.
I see. So it provides proof without total disclosure.
Exactly. A regulator could verify that a transaction is legal without needing to see the full identity of everyone involved on a public ledger. Finding that balance between accountability and privacy is really the key to digital finance moving beyond its Wild West phase and into a globally accepted reality.
Wow. We have covered a huge amount of ground today.
We really have. From Ron Barron's old school bet on banks to the new school infrastructure from Equal End and the AI race at BlackRock, then the political token confusion, Blue Origin's commercial jump, and finally, this deep privacy debate at the SEC.
The one clear takeaway is that the pace of change is just accelerating everywhere. All these world's finance, tech, politics, even space are all starting to collide.
So as a final thought for you to take with you, we've talked a lot about institutional adoption today, BlackRock, Equal End. Which major traditional industry that we haven't talked about do you think will be the next one to be completely upended by either decentralized tech or the new commercial space race?
That is a fantastic question to chew on. Thank you so much for joining us for this deep dive. As always, stay curious and stay informed.
Thanks for listening to Corner Room. We always appreciate you tuning in.
We'll catch you next time.